Welcome to another edition of a quick tutorial. Today we'll be talking about technical price patterns, specifically support and resistance. These can be really important patterns in the market, and typically they're either a continuation or a reversal. You'll see breakouts and breakdowns. A lot of traders use those to enter positions, and many technicians use the targets to help plot price targets. They can be drawn on a variety of time frames, whether you're using daily, weekly, monthly charts. And one thing in particular is areas of what I call price compression can help spot emerging moves. So the first one we'll take a look at is a simple trend line. And normally you think about trend lines as a series of higher highs and higher lows, or a series of lower highs and lower lows in the case of a downtrend. And what you're really seeing here is creation of a price channel. And so we can see an uptrend here, and what you're looking at is this position, or this instrument that's being traded is oscillating between the upper ranges of the channel and the lower range of the channel. And so this would be considered still in place or still a valid trend until it broke down below that lower line. If it did break down below the lower line, certainly that would be a sign of weakness. If it broke above, it might be that it's starting to accelerate the trend. But traders really like to see these patterns, and they like to know that there's an uptrend is in place until it's not in place anymore. So rather than try and guess the turnaround, many will just stay in the position. Now, support and resistance, this is one of the fundamental concepts of technical analysis. And if you look in the rectangle, the box there, that top line is labeled resistance, the bottom line is labeled support. This is really important to understand and to really look for in the markets. And the key here is that typically markets will trade in a sideways move, and you'll see some price compression, and it's almost coiling, waiting to kind of spring, or waiting to break out. And so the longer that you see this base, this little area form, the more significant it is. And so a trader looking for an entry might wait for price to break out above that resistance line. You can see there it broke above the resistance line. And the nice thing is, what was resistance, or the ceiling, once you get a breakout above, that becomes a new support line or price floor. And so if you're someone who entered this position once it broke out above resistance, which is a very powerful breakout signal, you could then put a stop or an exit a little bit below the old resistance, what would be new support. And so take a look in your positions or something you're watching for these, as they are very, very powerful patterns. You look for breaks above or below to signal potentially a new trend or a new opportunity. And the nice thing is too, if you do trade on one of these, that old resistance or old support are areas where you'll know you're wrong if the trade kind of comes back and through those. So a quick tutorial on trend lines, trend channels, and support and resistance. Best of luck in trading. Please like the videos, subscribe, and all those other things. Good luck.